Good evening, everyone. Here's a summary of Federal Reserve Chair Powell's press conference of November 7th, 2024, told in 7 acts. But first, some would say that the dramatic interest rate increase that the Fed orchestrated to control inflation is a lot like choking your dog to stop it from barking. Inflation is caused by government spending and printing money. Strangling the economy with rapid interest rate increases may slow inflation, just like depriving your dog of oxygen stops his barking. But that's a different story we will save for later. Now, on to our play. Imagine this. It's a crisp October morning in 2024. The streets of Washington buzz with anticipation as journalists and economists gather for Chair Powell's latest press conference. The atmosphere crackles with energy. Everyone's eager to decode the Federal Reserve's latest moves and what they mean for our economic future. But as Powell steps to the podium, his calm demeanor sets the tone. His message? Steady progress. Today, we're going to break down what Powell shared, why it matters, and how it reflects where we're headed as an economy and as a society. Act 1. A resilient economy in uncertain times. Let's begin with the big picture. Chair Powell painted a portrait of an economy that's holding strong against the odds. GDP growth, a measure of all the goods and services produced, expanded by 2.8% in the third quarter. Let's put that into perspective. We've faced rising interest rates, a housing market slowdown, and global uncertainty. Yet the U.S. economy keeps moving forward. That's like running a marathon while carrying a backpack full of rocks and still hitting a personal best. Consumer spending remains a star player. Powell highlighted how Americans continue to shop, dine out, and invest in experiences. What's driving this resilience? Wage growth, steady employment, and despite many challenges, a persistent optimism. Then there's business investment. Picture companies doubling down on technology, intellectual property, and new tools to stay competitive. It's a vote of confidence, not just in today, but in tomorrow. Yet, even amidst these bright spots, Powell didn't shy away from addressing the weak housing market where affordability issues and high mortgage rates weigh heavily. Now, let me ask you this. How does an economy keep moving forward when its foundation, that foundation being housing, is struggling? The answer lies in balance, according to Powell. He emphasized that while certain sectors lag, others, like technology and services, step up. It's a reminder that our economy isn't monolithic. It's a living, breathing organism. Act 2. The labor market's new normal. Next, Powell turned to the labor market. It is considered a bellwether for economic health. Here's where the story takes an intriguing twist. For years, the labor market was red hot. Companies couldn't hire fast enough and wages surged. But now, the flames have cooled to a steady glow. Over the past 3 months, job gains have averaged 104,000 per month. Powell pointed out that this number reflects both natural cooling and temporary factors like October's labor strikes and hurricanes. And while 104,000 may seem modest, it's still a sign of a healthy labor market, one that is not overheated and not frozen, but balanced. The unemployment rate, it's at 4.1%, edging down from recent highs but higher than last year. And here's the key. Powell called this a sign of stability. It's like a seesaw finding its equilibrium. Hopefully no wild swings, just steady motion. But what about wages? Powell shared a fascinating development. Nominal wage growth has slowed. For workers, this might sound like a bad thing, but in the Fed's eyes, it's good news. Why? Because slower wage growth reduces inflationary pressure, making everyday goods more affordable over time. The labor market, Powell explained, is no longer a runaway train. Instead, it's a measured, reliable engine driving the economy forward. Act 3. Inflation. The phoenix rising. Now, let's tackle the dragon in the room. Inflation. 2 years ago, inflation soared to a jaw-dropping 7%. It was like a wildfire, consuming purchasing power and rattling markets. But as of September 2024, headline inflation has fallen to 2.1%. Imagine a firefighter finally quelling the flames after months of relentless effort. That's what this feels like. Powell broke it down further. Core inflation, which excludes volatile categories like food and energy, stands at 2.7%. It's still a touch above the Fed's 2% target, but the trajectory is clear: downward. Interestingly, Powell highlighted a tale of two inflations. In non-housing services and goods, inflation has returned to the stable levels of the early 2000s. But in housing services, inflation lingers. Why? Lease renewals are catching up to past market rent increases. It's a lagging effect, like the ripple of a pebble in a pond, long after the initial splash. What does this mean for us? For the average person, it means that while prices are more stable, we're still feeling the sting in certain areas, particularly rent. Powell acknowledged this disconnect, emphasizing that it takes time for real wage gains to fully restore purchasing power. Act 4. A Fed pivot in monetary policy. Here's where Powell dropped the headline: a 0.25 percentage point rate cut. Nothing too aggressive here, but part of a gradual expected reduction. This move brings the federal funds rate to a range of 4.5% to 4.75%. It's the Fed's way of saying, we've done enough tightening, now let's ensure we don't overshoot. Powell explained that the Fed isn't just looking at inflation, it's also watching how economic activity responds. This is what economists call a data-dependent approach. Powell's message was clear: if inflation continues to cool and growth remains robust, more rate cuts could be on the horizon. But if inflation rears its head again, the Fed won't hesitate to pivot. It's a delicate balancing act, like walking a tightrope between two skyscrapers. On one side is inflation, and on the other is economic stagnation. Powell's steady hand reassures us that the Fed is ready to adjust, whatever the winds may bring. Act 5. The human side of economic policy. As Powell wrapped up, he addressed something often overlooked: public sentiment. Despite improved indicators, many Americans still feel the pinch of high prices. This sentiment isn't captured in charts or graphs. It's lived in grocery stores, gas stations, and housing markets. Powell acknowledged this gap. He emphasized that the Fed's ultimate goal is real economic relief, not just numbers on a page, but tangible improvements in people's lives. Real wage gains, he said, are the key to bridging this divide. It was a moment of humility, a reminder that behind the jargon and metrics are real stories, real struggles, and real hopes. Act 6. The road ahead. Finally, Powell looked to the future. He spoke of risks: geopolitical tensions, volatile oil prices, and supply chain disruptions. Yet he also expressed optimism. Long-term Treasury yields are rising, not because of inflation fears, but because markets believe in the economy's strength. It's a signal that, despite challenges, the foundation is solid. Powell also touched on fiscal policy. While he diplomatically avoided stepping on political toes, he noted that the U.S. fiscal trajectory is unsustainable. Large deficits at full employment are a ticking time bomb. Yet the Fed's role remains focused on monetary policy, ensuring stability, not dictating spending. Act 7, a call to action. So, where does this leave us? Powell's message is one of cautious optimism. The economy is resilient, the labor market is stabilizing, and inflation is coming under control. But challenges remain, from housing affordability to fiscal sustainability. As we move forward, let's remember that economic policy isn't just about managing numbers. It's about shaping lives. It's about creating opportunities, fostering stability, and ensuring that prosperity is shared. At least that's the pitch the Fed would have you believe. That's their vision of what they are doing. So here is our conclusion. Chair Powell's press conference was more than an update. It was a compass pointing us toward the economic crossroads we face. The Fed's actions reflect a delicate dance between caution and confidence, control and flexibility. In the end, the economy isn't a distant machine. It's us. It's our choices, our innovations, and our resilience that drive it. And while the path ahead may be uncertain, one thing is clear. With steady leadership and collective resolve, we can navigate whatever challenges come our way. Thank you.